introduce Jeff Dobesh. Jeff, he works with a company that does precious metals. And so right now he's seeing an influx because of this volatile market as well. People are asking, though, Mike, what's going on with the economy? What are your thoughts on the market right now? And let's talk a little bit about that before we dive into this topic right now.
Thank you, Deanna. Thank you for getting us rolling again. Jeff, awesome to have you. We'll talk about precious metals. And let me just do a very quick market update where we're at, and then we'll ask a question or two about precious metals, and then we'll go into your main presentation on legacy and its and related topics. So just a few quick comments. Obviously, we've all seen significant increase in volatility of the stock market. And the Fed meeting in late July it went as expected. The Fed decided to keep the rates steady and indicated very, very clearly that they're shifting from the focus on the inflation to the focus on the full employment, their dual mandate. The economy numbers are such that unemployment is increasing. There's more and more data supporting their concerns on the economic health, and they're less and less worried about inflation. So all that is leading to a likely cut in September, first cut, and it will be a first symbolic. It will be a first cut, probably small cut, but a symbolic cut, very, very important that they're starting to ease. And what's going to happen after the election is the unknown. So what is clear is that stock market volatility has increased substantially, and a lot of money has gone into the safety of bonds. So 10-year Treasury yield and multiple other yields have fallen as capital has shifted from stocks to bonds in the expectation of the lower interest rate environment. How fast the Fed will cut, only the time will show. But the fact that they're going to cut is pretty likely. So these are pretty basic concepts. The other really important element is an election year, so they don't want to look political. As a result, they probably will do just one cut in September and probably a quarter and leave it alone, let the election play out. And then it doesn't matter who wins. What matters is the economy softening. Interestingly enough, yield curve, which is the difference between 10-year Treasury and a 2-year Treasury rate, was negative for quite a while. It was an inverted yield curve, and it briefly uninverted. At this point, almost flat. That uninversion, typically a clear signal that the economy is entering into recession. So we look at the rear view mirror. The numbers come out quite often months after events happen, and the likely scenario is that we're going to see recession. We might already be in the recession, and as a result, the Fed might act substantially high, although speculative, right? We don't know that. But we do know the rate's likely going to go down. How much and how fast will depend on the data. So that's all pretty clear. As far as the opportunities ahead, we still see a great time to be a lender. We continue to loan money from Tempo Income Fund, from Tempo Advantage Fund. We see this is one of the best times in the market. Most investors have spoken, and they want to hear a few key words. They want to hear predictable income, low risk or strong downside protection, and they don't want to hear growth. They want to see income, predictability, safety. These are the key words. So that's what we've been focusing on, and it's kind of the market sentiment. People are still nervous about what's going to happen with equity, but debt, conservative underwritten, looks great. And I wanted to shift now and give Jeff the floor to talk a little bit about precious metals. What's interesting is, from my personal observation, is gold typically is a hedge against uncertainty, hedge against nervousness, and the fact that things are getting more nervous now may be a bullish sign for the gold. There's another, and silver and other precious metals. Another interesting point is historically gold didn't like high interest rate environment. Why? Because as Warren Buffett says, gold doesn't reproduce. It doesn't give you a yield. So as interest rates get higher, or they stay at a high level, investors gravitate to keep their money in cash or treasuries that get yield, and the gold price doesn't necessarily enjoy a bull run, but the gold has enjoyed a bull run despite the high interest rate environment. So this is very interesting. And then as interest rates may start going down, that may be more bullish news for gold. So I would love to hear your thoughts on gold and silver and other precious metals. And welcome again. Thank you, Jeff.
Well, Mike and Deanna, to both of you, thanks for having me. It's I just got to admit, being invited by you guys on, it means a lot to me. Precious metals guys, we don't always get invited onto events like this because we're kind of that apple in the orange bowl. And so I'm thankful to be on with you guys. Thankful for the folks that are joining the call. And I'm a fan of tempo funds across the board. Mike, Deanna, from what I've observed, watching you guys over the last couple of years, one thing I love about both of you guys is that you're hands-on, you operate with integrity, and you care about your clients. And in the day and age we live in, man, there are an awful lot of operators out there that don't operate with integrity. People are transactions more than their relationships. And I just respect you guys, that way. So again, it's a privilege, to be on here with you guys. For everybody.
You're too kind. Thank you, Jeff.
Thank you, Jeff. Yes, thank you. And when we planned this months ago, I was really excited about the topic. It's just timing of the market. Everything is just ironically lining up. And then, even last month's topic, which I didn't plan before we planned ours, it just all aligns very good with what you're going to talk about today. I'm excited to have you. So thank you so much to join us and say those nice things. Because when I see, competitors working in your space, I feel the same about what you do and knowing you. So that's great. Thank you.
I appreciate that. Mike, to circle back to kind of market comments real quick, and man, I respect your thoughts and your insights. I would agree with you wholeheartedly. I think recession is the word right now, and I think as far as investors go, and as far as us as operators, I think we need to be filtering everything we're doing right now with that in mind. What's the impact? How do we navigate it? It's like you said, we don't have a crystal ball. The weird thing about recession is we just don't know how long. What are we talking about? And anybody who wants to run around and give you a definitive date, it's a fool's errand. To do that. I think we have to operate with the information that we have and make the best decisions based upon that. And I think using that recession filter will be important. And I think that covers all asset classes right now, not just what I do in precious metals, but across the board. I'm completely in agreement with you too. The election in November, the Fed will throw, they'll throw a rate cut out next month. It'll be small. I honestly, I don't think it would be what they would want to do. But what they want to do would come across as political, and they really can't afford to do that. And whoever takes occupancy of the White House in January, it doesn't necessarily impact, in my opinion, where we're going with rates, because I think the Fed has to address the recessionary issues that we're facing. So.
Thank you, Jeff. I'll just add one quick comment. We had a number of these educational concepts in a video out where I personally think the Fed chair is more powerful than the president of the United States. The president has a nuclear button in his hands, but the Fed chair controls interest rate policy, which is far more powerful. And yeah, you're right. Maybe they want to do more, but they're going to be careful in the first cut, and we'll see what happens. I do want to bring one more point. So I think it's going to be bullish for gold. Again, who knows the future, right? I have no idea.
Yep.
Nothing beyond historic precedent that when interest rates usually go down, precious metals get sort of a tailwind. The other sector that tremendously benefits from the low interest rates is real estate in general, commercial real estate specifically. So we're cautiously very optimistic. We are looking at the light in the tunnel. We've had a couple of very, very difficult years with the higher for longer interest rates. And now we may see meaningful tailwind as Fed starts cutting, because the bond market is already retracted from where we were. We were at 5% rate on 10-year Treasury. Now we're down below 4%. So the market is ahead of the Fed, and or at least they're acting in conjunction with the Fed expectation. So commercial real estate might see some tailwind, significant tailwind, and only the time will show. But directionally, the same thing happened in the reverse direction. When Fed hiked fast, it hurt commercial real estate market fast. And now, if they're going to cut, especially cut at a reasonable pace, we may see a lot of support for commercial, and deals that struggling might look better. So we'll see what happens. We don't know. But I just wanted to point out, finally, we're beginning to see a little bit light in the tunnel, and I wanted to show a little bit of optimism and hope, because that's how I feel. So
I'm personally
yeah.
excited. I started my real estate career in the crash, last crash or recession, whatever you want to call it. And great opportunities came. And that's actually what inspired me to go towards commercial real estate. But I've learned a lot since then, and I believe in diversification over everything. So it's one of the reasons why I came on with Mike. But anyways, Jeff, I want to address the audience. Throughout your presentation, it is open for discussion. So please raise your hand or type in a question if you have one along the way. But definitely, go ahead and take it from here, Jeff.
Sounds good. I appreciate it. One last thing on the gold and silver market, with where we're going. To Mike's point, lower interest rates generally makes the ground more fertile for the precious metals market. And so we're excited about what the next 12, 24, 36 months look like for the metals market. Really excited that way. Even with the market, the gold market particularly, setting all-time highs this year, people have asked repeatedly, is it too late? Should I wait? Is there still room to move? The amazing thing that we saw this year is we set all-time highs in golds in a high interest rate environment, with predominantly the move being generated from investors outside of the United States, or the Western investor not being involved. And so what that would say to us is that there's a lot of room yet in the market, and there's a lot of room for growth. A lot of just some really nice days ahead in the precious metals market for sure. And we can always talk more about that later, but that's not exactly why you guys brought me here today. I'm excited, just by way of background real quick. I started in the metals business back in 1997 with McAlvany Precious Metals. It was known as McAlvany ICA at the time, and worked for our current CEO is a guy named Dave McAlvany. He's a second generation operator. His dad started the company 52 years ago in their kitchen, and passed the business along to David. It's really one of the best parts of what we do is the family heritage. Excited about that. Thankful that I work for a company that is, got a vision for the third and fourth generation of the McAlvany family to run what we do. And in our industry, in the precious metals business, that we're the oldest, continuously run, owned, and operated brokerage in the country. There are other companies out there that would talk about being around since the mid 70s, but they've exchanged hands a number of times. And so working with the McAlvanys is kind of a unique moment for sure. We're talking legacy. I'm going to share my screen here with y'all, if you're good with that. Can I see here? Am I sharing? Can you see my screen?
Nope, I can't see your screen.
All right, let's try this again. I'm getting a message saying host disabled participant sheet.
Oh, that's my fault. I'm sorry. Here.
No, that's okay.
You have the floor now. Okay.
I'm good to go.
Yes.
Let's try. Here we go. Move it this way. We'll start here. We're talking about generational legacy, and there we go. That's my family right there. My wife, Danica, is on the screen to my right. We've been married 25 years. she, outside of my mother, I had never met anybody like my wife. She's really pretty much the most amazing woman I've ever met, and we just got a lot of memories, and it's marriage has been an absolutely rich moment for us. My two kids, Hannah is just graduated from high school, looking forward to going to college, going to study engineering, has a desire to go influence infrastructure in developing nations and help those that struggle, that just don't necessarily have the resource base that we have. And then my son Micah is going to be a junior in high school. And as you can tell, I know this is a shock. They don't look exactly like us, but we adopted Hannah and Micah. Hannah from China, Micah from South Korea when they were babies. Hannah, we held her for the first time. It will be 18 years ago on Tuesday, and held her as an 8-month-old baby, and she changed her life, making us parents. And then Micah we adopted a couple of years later, and we brought him home just a little over a year. And so that's my family. And when we start talking about generational legacy, the topic means a lot to me for a number of reasons. But one is just simply the fact that so much of our time, and when I talk with Mike and Deanna and others, we spend so much time talking about the day-to-day details of our business and trying to help clients with our business that sometimes I can get one-dimensional in what I'm talking about. And when I start talking and when I look at this picture particularly, it reminds me of what really kind of matters, and the influence and the importance of the topic. And so when we start talking about generational legacy, I just want to emphasize to us, it really is built. Generational legacy is something that you can't buy. We think we might be able to. We think we might be able to find a shortcut on this deal. But when we start talking about generational legacy, it's something that takes place over time, and it takes a lot of effort and a lot of intention that way. We'll talk about that a bit just briefly here in a minute, but I want to lay just a couple ground rules if I can as we come in. Number one, when we talk about legacy, everybody leaves one. So, I mean, it's a topic that applies to everybody. We're all going to leave a legacy that way. Number two, I'm not an expert. I'm a gold guy. I mean, to give you a little background, I mean, I grew up on a farm in South Dakota. I grew up in a single parent home. In a lot of ways, I grew up on the wrong side of the tracks, and just blessed that as God would have it, I ended up meeting the McAlvanys, and honestly, that encounter changed. You talk about influencing a legacy. Just even getting hired by the McAlvany family changed just the direction of kind of my life. But by no means an expert, other than the fact that it matters to me. And I have to be honest, I kind of nostalgic this year with my daughter graduating from high school, thinking about just, that old adage, right? The days are slow, but the years are fast. And so legacy is kind of important right now. Remember this too, there are no perfect family legacies, right? There's no perfect families. There's no perfect legacies. We're all kind of learning as we go that way. And it's not too late to start. I mean, some of you on the call, on the recording might be thinking, I've waited too long, I've delayed. I just want you to know that there's no pain, there's no crisis, there's no failure, there's no delay that trumps just jumping in and getting started on this thing. So it just matters what we're doing here with legacy. So as we jump in and we look at this thing, the legacy you leave is the life you lead. It really has a deep importance. And I want to stop and just touch on this for just a second. Probably the most influential person in my life was my mom. Hardworking lady. When she found herself in a spot where it was just her bringing up my sister and I, working 3 and 4 jobs to make ends meet, she has no idea the influence and the impact that she made on me. And I stop here for just a minute, just because, Mike, I know that this year's been tough. I mean, I know your mom impacted you deep, influenced you deep that way. And the life that our moms led really have shaped us as the guys we are today. And so it matters the way, and to know that the impact that our life leaves that way. So when we jump in here, why do you want it, right? Why would we want to talk about, or why would we want to leave legacy that way? You know, it's and what I would say to you in a sense is that our lives aren't our own. We're all kind of part of, you know, something bigger, and it stretches into all areas of our life. Family obviously comes to mind. Um, the relationships that we have with others, our businesses, our jobs, the things we read, all of these things are shaping us and molding us to be the person, because we have impact, and we have the ability, you know, in our day-to-day journey to connect with and influence people that way. And so I want to just kind of jump in here and just, you know, throw my thought of what is legacy at you. And what the way I would define it is that it's the self-conscious, intentional acts of living with purpose to pass along a life message. And you know, this is something that, again, I'll just admit openly on the call, I've struggled with at times. It's easy to get caught up in our day to day. It's easy to get caught up in the pursuits of in the tyranny of the urgent. And I don't know about you. I mean, there are just literally moments in time at the end of a day. The only thing intentionally I want to do is to sit in my chair and watch, you know, something on TV. I mean, you know, so by no means do I have this thing dialed where we're some kind of machine here. But to leave legacy, there needs to be some intention, and there are acts of living. And here's the best part: whether it's me or Mike or Deanna, everybody on the call, you're already doing some of this anyway. And I think you're going to see this, and I think you're going to walk away going, "Oh my gosh, you know, we're already, you know, kind of have this thing working." I'd encourage us. Another quote: you know, carve your name on hearts, not just on a tombstone someday. And this comes back to, I mean, I've got a client that has never been married, doesn't have immediate family, and yet in his community might be the most influential guy in this little rural community. I mean, knows everybody. His front porch is a gathering place for the community, and when this guy's life is over, the impact is going to be deep on this little rural community. So, you know, this is kind of what we're shooting for and where we're going. What does legacy look like? You know, I'm going to look at it. You know, we could cover it a lot of different ways, but I'm gonna look at it from four different directions. First is from a personal standpoint, and there's a couple of things for us to acknowledge, I think, as we move forward into uh, generational legacy, is that personally within us, we need to acknowledge the baggage that we bring to the table. Okay, we all have a past. We all have a situation, right? I mean, again, I'll just use my illustration for a second, but my dad, not involved in my life as a kid, not around, not accessible, and had his own personal demons that he battled. And I spent the first part, the early part of our marriage, early part of our family, early, you know, and really the early part of my life, um, trying to pretend or trying to act as if that wasn't part of my story. And until we acknowledge the baggage that we bring with us, and again, we think of baggage as negative, but baggage is a combination of things, right? I mean, it's not just the negative, but it's the positive things that have come to influence us. But we need to acknowledge the positives and the negatives that we're bringing to the table. And any of us who are married will understand the fact that, I mean, when you bring your set of baggage and they bring their set of baggage, and you open that up, I mean, you got all kinds of, you know, goodness going on there. So you need to acknowledge that to move forward with that self-conscious intentionality that way. And then on top of that, I think sometimes we can get a little nostalgic and a little romantic when we talk about doing something like generational legacy, that we look forward and go, I'm just going to put this plan in place and I'm going to work my plan and it's going to be fields and flowers the rest of the way. And the truth of the matter is life brings all kinds of distractions. And, you know, we can name, you know, any number of them. We can have a death of a loved one. You can have a birth of a baby. You can have, you know, some kind of damage to your home. You can have a change of jobs. You know, you can have a change of relational status. There's distractions that come. As a matter of fact, again, another client I'm working with, we found out that in the prime of his life, I mean, he sat down to watch TV Sunday night and had a coronary moment and died in his chair Sunday night. And now his family, you know, to put it in perspective for us, we have all of these things going on around us, economically speaking, politically speaking, geopolitically speaking, and yet for this one family, none of those things matter right now. And so we just have to be prepared for the distractions that come in life, and know that they're going to come, and to be ready for those things and to not let them necessarily, I mean, they may cause us to push pause on our plans and our intentionality, but it doesn't mean that we push stop that way. And so you come at this from a legacy standpoint first, from a personal standpoint. Secondly, we talk about it from a family standpoint. And I just want to leave you some thoughts here, when we talk about family. First is, what's your family's identity? You know, who are you as a family? When you sit down and you look at your house, right? I mean, in a sense, you've heard this before. When you walk through somebody's house and you look at the pictures hanging on the wall, it will tell you an awful lot about who they are. But you know, as you're trying to craft a legacy, I'd encourage you to define what your identity is as a family. What do you guys delight in? You know, what kind of food do you guys like to eat? How do you like to vacation? What kind of music do you listen to? Right? What are you guys watching? You know, what kind of movie do you go see? What are you streaming? But what brings joy? You know, if you're gathered in the backyard, what kind of games are you guys going to play? You know, what do you do if it's snowing outside? But just, you know, what brings joy to your family? Because it matters. You know, what kind of habits do you guys have? Are you early risers? Are you planners? Are you type A's? Are you more go with the flow? You know, what kind of habits and disciplines are there in your family? And then when your service as a family, how do you guys give back? How do you impact other people? And I bring this up. These are conversations that I would encourage you to be having with your family, as you continue to move toward that goal of leaving a generational legacy, because the impacts that are the things that identify you as a family right now, the delights and the habits and so forth, influence your kids, they influence your grandkids. And these are going to be the things that maybe 2 and 3 generations down the road, these are the things that they're going to be continuing to talk about doing because of the habits and the enjoyment that takes place now. And I put down this question: what's your family feast? Honestly, we love to eat. Okay, we love to eat. We love good food. You know, even when the kids were little, we would stay at less expensive hotels and places so that we could go eat local cuisine. And we wanted our kids to take in local. We skip on franchise stuff by and large, and we're trying to find mom and pop shops and cafes and whatnot, and we want to eat local cuisine. And we've eaten some fairly unique foods over the years here at stateside and internationally. You know, but there's memories there. But I bring this up as you're developing legacy. The dinner table, the island, is a great place to be building foundation. Maybe you guys are coffee drinkers, and you know, I don't know what it is, you know, but whatever it is, then, you know, spend that time around, you know, making a good cup of coffee and celebrate and listen and talk. And it's a great place to have those questions, come up, in where you're drawing your kids in to the conversation. We're going to talk about a couple more things here in a minute, but I'd really encourage you around the table to draw your kids in early and often, asking them about what they delight in and what they're excited about, maybe what they're afraid of. Ask them to weigh in on investment decisions, have them weigh in on how you're going to vacation, have them weigh in. I mean, it doesn't mean that they have the last say, but they do have an influence in the legacy that's being left. And it's a pattern and a habit that's established in their life that they'll take with them as they have a family, and as they pass that on to grandkids and great grandkids that way. But let me just finish. Hey, where do you guys feast? I mean, who knows where it is? It could be at the dinner table, over coffee, ice cream, dessert, whatever it is. But make sure, build on that rhythm, for sure. Financially, we of course we gotta stop here. There's 100 things that could be said here, and there are people who are probably far more skilled than I am to be able to talk even about this. But you can't talk early and often enough about the fiscal side. I have to admit, in my family, this is an area I've been weak in. Because I grew up with a mom who didn't have $2 to rub together at any given time. And so we didn't even talk about the idea of what to do with if you had any extra money. And I would encourage you, talk again early and often with your kids. It's one thing to save money, it's another thing to invest it. And I grew up in a home where we didn't have a cushion or extra. And so I spent a lot of my life thinking, I just got to save money, save money, save money. But it wasn't working for me. It wasn't being put to work. It wasn't multiplying itself. And so we all know the stories of compounding. We've all seen it, right? We've all seen the different illustrations of when you start an IRA for your kid at this age and add this much, or if you just put this much money aside. I mean, we all have those illustrations. But for you to build that generational legacy from a financial standpoint, not only should you talk early and often about it, but it's time to get it going. It's time to start it. And it's time to implement it. And for some of you, maybe you're sitting here and saying, I didn't do it with my kids. Well, do it with their kids, and bring them in to that moment. And not only do you talk about it, I'd encourage you, then you need to have some structure behind yourself financially. When we talk hard structures for just a minute, and again, like I said, this is a conversation to probably deep dive on another call. Deanna will, more than likely take care of you this way. But when we start talking about hard structures, there's some things that everybody needs to have in place when you're looking down the road, for financial legacy that way. You got to have a comprehensive tax strategy. That needs to be in place, huge. That, again, I could give you horror stories, lessons learned on that for sure. And you've got to have a will and an estate plan that is crafted and fits the rhythm of your family. That way, you need to, and again, let me stop for just a minute. And I've got no dog in this hunt really, because I'm a gold guy. But the fact is, whether it's the tax advisor or the estate plan, don't cut corners on that, man. It'd be my encouragement. Pay up on that. You want the best in class helping you with those things. Okay. Other hard structures. Your investment and your bank accounts matter. Who you're working with, institutions that you're interacting with that way, and bring your kids in the game on that. Would you? They need to be a part of that process. I'd encourage you again, whether it's a brokerage account for investments, it's a Roth IRA for them. Get those things set up so that they're learning how to drive those vehicles that way. And then, if appropriate, a family trust. And again, don't cut corners on that. Make sure you've got best in class helping you, who know your family, and kind of know your goals as a family for not just the next generation, but the next 2 or 3 generations that way. And then I'd encourage you with some soft structures. And again, this list could expand if we opened up and talked about this. But there are some simple things that you can put in place with your family, with your kids, with your grandkids right away. Danique and I, from the start, we had what we call the 1-day rule on any purchase, over a set amount of money. Where if we were going to go step out, whether it was gear, we're outdoor enthusiasts, so whether it was bike related or hiking, camping, whatever, everything was a 1-day rule for us to contemplate it, think about it, talk about it before we jumped in on that. And again, it's just a soft structure that we've passed along to our kids, and now we watch Hannah and Micah. They, contrary to us when we were growing up, Hannah and Micah, they're getting bombarded all the time, social media wise. Got to have this, should have this. I mean, they would spend through money uber quick if there wasn't a 1-day rule in place. And so that's just a suggestion of soft structure that you're passing along as a legacy gift that way. I'd encourage you to consider as a soft structure. There's some things as soon as your kids are able to start helping around in the house, and you can do this with your grandkids, right? That there's just some things, some practical considerations that you give them. Number one, if you want to separate yourself in life, work hard. Meaning, like, show up on time, give a full day's work, look somebody in the eye, and work hard. And start building that into your kids, into your grandkids that way. Be grateful. Be somebody who has just a grateful spirit to them, to see what to be grateful for what they have rather than being consumed by what they don't have. Again, our kids are growing up in a moment where social media will tell them everything they don't have, everything they should have, and we'll pretty much want to let them know that they're missing out. Want to build deep in our kids the gratitude that they have just with what they have around them that way. Teach them, you put on a display for them how to give, how to share with others, to be generous that way. And everybody kind of has some different angles that way, but that generosity is a key component in your financial legacy. That way we're not just accumulating, but we're accumulating to be able to give away and to bless others that way. And then just some basic financial ideas for your kids, right? That number one, spend less than you make, right? I mean, that just what a mind-blowing concept, but you spend less than you make. Always save, right? And as you're saving, you're saving to the goal of investing that way, and then you always give. Last thing I'd say when we start talking about financially, this is something we've done with our kids legacy wise, is they weigh in on where we invest our money. They weigh in on where we're giving our money away, where we are in our generosity. They have a say, and they've had that since I don't know, probably since junior high that way, and would highly encourage you that because it shaped their mindset as to what they do with their own income now as they're working and making their money that way. Last thing that I would talk about is when we talk about what it looks like, right? We've talked about it personally. We've talked about it from a family standpoint. We've talked about it financially, spiritually. I think is a huge component as we look at leaving a legacy that lasts beyond us that way. Keep your heart with all vigilance. From it flows springs of life is a verse of scripture that means a lot to us in our family. Our heart as a person, you, me, everybody on the call, what your heart is set upon is where you're going to end up. I mean, the thing that your heart has an eye for is where you're going to go. And so it's important, at least in our context, to look at our kids and let them know, man, what they're filling their heart with is where they're going to end up. And what owns their heart is where they go. It's kind of like that old adage, if there's anybody on the call that's a mountain biker, a single track mountain biker, you taught early that where your eyes are looking is where your bike goes. And the same is true with our heart that way. And then really, where your treasure is where your heart is. And so that's why these pieces kind of matter, from a personal standpoint, a family standpoint, a financial standpoint, that we're shaping and talking and discussing with our kids over meals, over coffee, in those moments, to see that our life isn't our own, that there's a bigger story at work in front of us, and that our decisions, right? Decisions made today matter later in life. What can I do next? Let me jump on this, and we'll walk through this, and then I want to open up the questions if I can. What to do next is what I'd encourage you to have a meeting. Maybe it's you by yourself in a piece of paper. Maybe it's you and your wife. Maybe it's your family. But get together and share your heart. What do you think about legacy? What are you afraid of? What are you disappointed in? What are you overwhelmed by? But to have that moment, and to be able to just kind of share your heart for the legacy of not only of your family, but the generations to come after you. But take that first step that way, because I don't know about you, but we all know people who talk and talk and talk about something, but never put it into action. What you can do next is have a meeting. Identify an identity. I would encourage you then, your next step, right? So you have this meeting, you share the ideas, or your heart of what legacy, then identify the identity of your family. Okay. We've not done this as a family, but I've heard of families that have family mottos, right? They've got a motto that they live by as a family, or they have family core values. I don't exactly know how you want to craft that, right? But I would encourage you, who are you as a family? Where do you want to go as a family? And what kind of impact do you want to make? And then reverse engineer that thing back, right? I mean, you see the horizon, you see the target, and then reverse engineer back to where you are today. All right. And then in that moment, start building forward. Right. I mean, we talk about people, and we look at certain whether it's companies or people, and they've been successful in their career, in their particular field. Maybe the better way to put it is this: have you ever just watched somebody who's really good at what they do? It's absolutely fantastic, though. It doesn't matter what it is they're doing, but if they're good at it, it's fun to watch them. In each of those cases, that person just didn't start doing that a week ago. It's been a lifetime of investment, a lifetime of little steps, right? In a sense, you can't walk a mile until you take a first step. And then you can't get to a half a mile without taking then another step, if that makes sense, right? So you gotta have that identity. You gotta have that out in front of you, and then reverse engineer, and then take that step and make it move forward. And that's what I'm saying here, is that you pick one area then, as you guys have identified where you're headed and the impact you want to make, pick one area as a family. How are you going to make it happen? And then go get it, right? Set it. And what I would say is, when are you gonna measure it? Are you gonna do it in 3 months? You're gonna do it in 6 months? You're gonna do it in a year? But together, just be honest with each other and say, hey, in 1 year, we want to be here. As far as family legacy goes, this is where we want to be. And then be honest in those meals, those meal times, those vacation times, those long, right now with our kids, one of the best spots for us is when we're traveling, in the car from here to there. We're talking about these kind of things. And just to understand that it's a process of building this legacy. And I'd finish with this. This is from my grandpa. Most of you, well, none of you will ever, know who Ken Hagen was, but Ken was my grandpa. He was a farmer in southeast South Dakota. Until I got married in Durango, Colorado, he had never been outside of a 60-mile circle of his farm. He was born on the farm that I went and worked at in the summertime. And he just, that was it. He just never left the circle. And I remember one time asking him, Grandpa, why you know, why did you never go travel or go do, and he just looked at me, he goes, Jeff, I had everything I needed right here. He said, I had the farm, I had your grandma, and everything we needed was in town. So that's all I need. And he used to tell me all these things. He throw these little phrases at me when I was a teenage kid that didn't make a lot of sense. But he said this to me. He said, "From small seeds come big trees." And I remember him telling me about this because we're talking about the shelter belt around the farm and how they had planted trees. And it just went over my head. But now that I'm older, I look back, big trees come, and it doesn't take a lot, right? That small seed, it's small, that first step, that first thought to produce that big tree. But just understand though, big trees don't come overnight. It takes some time, it takes some effort that way. And but it's worth it in the end. And so I'd encourage you that way. I'd open it up to questions at this point in time. I know that Deanna, you can jump in here and steer me. I just kind of ran, my bad.
No,
On
that
that,
was
not a lot of interaction with you. I apologize.
that was a rich conversation. I mean, it was a rich lecture. I really enjoyed it.
That's what it was. It turned into a lecture. I apologize. It
No,
wasn't
I loved it. I love this topic. I have several things that I actually took notes on because you're right. Like when you start early with your kids, not only is it going to instill it in them, but it's easier because I started later, not because my mindset, I grew up in a home like you, and my mindset wasn't abundance, and teaching that abundance mindset and to give back and to appreciate your relationships and don't be distracted and focus on your goals. All these things start real early on. And I did start as early as I could, and the understanding I think is there. And sometimes it's hard to know with teenagers, where their mind's at, and they will admit later on, but it is easier if you start earlier for sure. And I totally 100% agree with get your financial planning, estate planning, all those things. You want good quality and you want to check in with them at least once a year, maybe a couple of years, but definitely because that will clean up, that will give yourself peace of mind, but even your family, it gives them so much more afterwards because you don't realize how this breaks relationships after if it's not done right. If you're gone and you've left something out of order and people take it personal, they take it to another level of ruining the family. Basically, you won't talk to grandma ever again because Aunt Sherry took this or whatever. And it's so important. And so definitely want to get that taken care of as soon as possible, but always check in with it and make sure that it's up to date and actually done right, because people get married, things change, and things can be stolen that you wouldn't expect to be stolen, that you wanted to be yours or was supposed to be yours because they told you that. But then the legal process and everything has its own loopholes, and you want to make sure those are taken care of with the right people, that they're looking out for you and double checking everything. I have this happening in my family, so that's where I get that experience from. But also I used to work in an estate planning law firm, and saw the other side of things, and it gets real nasty. And what it made me realize is your relationships are the most important things in life. All of this stuff and all these things we own are distraction, and that legacy that you leave behind is really all that is real. It is the only thing that matters, because you can't take any of this stuff with you. But I remember those talks at the dinner table. I remember all those things. That's the only thing I have left of my mom, right? So I'm really grateful for those things and all the things you touched on today. I love the 1-day rule because there's times I change my mind and I need to do more research. And if I could teach that to a compulsive teenage girl, that would be great. But I don't want to just accumulate things. And I live in a town where I see a lot of homelessness, and it's tough just seeing that these people made a decision, or maybe past generations made the wrong decision and it's affected them to this day, and a negative mindset or things that have held them back. And now here they are homeless. And what can I do to try to help? It's not very much, but I'll give what I can. And you wouldn't believe the little things make a big difference. Just handing somebody some shoes, old shoes, makes a difference. You wouldn't believe it. And you're never going to wear them again. So why not? But yeah, a very touching topic. And I really enjoyed all of what you said. I know that there were some questions that were submitted that we should cover, that I know that I think I gave those to you before, and you talked on a couple of them. I was having some computer issues when we first got started, so I don't have them up right now, but I'll try to get them open real quick.
Sure.
In the chat, though, if you have any questions that you want to ask, even if it's about gold or investing, go for it. Definitely want to hear from you, and be able to answer those questions live as well. If you want to raise your hand and I'll unmute you if it's easier. But definitely want to talk about, is it too late? If you're in your 50s and you want to start acknowledging, you need to build something for more than just yourself, or you want to give, is it too late? And the answer is no. I mean, I've seen people get rich overnight, but is that the goal? Like, what's the point? What's your why? I guess is my answer. I know you kind of touched on this a little bit, Jeff, if you wanted to add anything else to that.
Yeah, I think that, let's, from the questions that kind of came in ahead of time, to touch on that you gave me, which I appreciate, just talking about our space, our precious metal side. A couple of questions always come up. Number one is, what kind of allocation, what should we be looking at? Is a big question. And then number two, what do we do with metals? Right. I mean, because by and large, most people, their experience with metals has been grandma or grandpa bought some gold and silver and it sat in a box somewhere, and they didn't know about it. They don't know what to do with it. And, so to touch on those two things, quickly, I mean, the kind of the rule of thumb that we use, actually, if you're all right, can I share my screen for just a quick minute?
Yeah.
Here again.
Mm-hmm.
Pictures kind of work here, I think, a little bit for us. When we, whoops, that's from the beginning. That's my family again. Sorry, I should have done this different. I'm not very technologically advanced. So there's a quick run through again. All right. So from us, I mean, when we're talking with folks on allocation, right? We use what we call investment triangle. And on that, we're building out a financial house, and each side of the triangle has a mandate. And while there's no rule that says each side has to be exactly equal this way, because market conditions can change, et cetera. The base of that triangle, the insurance side, gold, silver, platinum, palladium, the mandate there is preservation. That's predominantly what we're looking for. And the rule of thumb that we use ultimately is that, somebody should be looking at about 5%, 5 to 10% of their net worth, or up to about 25% of their liquid cash assets, depending on the market conditions at the time. And what we've come to find out is that those two numbers kind of work together, and or equal out that way. And so that allocation piece, as they build the foundation, that's kind of the rule of thumb that we're using. And we like, this illustration, because we're building the foundation on gold and silver that way, as that asset, the insurance policy, the safety net in a sense, then to springboard clients to be able to go invest in funds and such here for growth and income on the left side. And then, as they're looking for cash alternatives on the other side. But then to answer the question, as far as, what are we doing with gold and silver? To try to answer the question, the Warren Buffett objection that, gold doesn't spin a dividend or pay any interest that way. We've implemented a strategy in the history of our company, over the history of our company, called ratio trading. And this is just simply where we track how gold and silver, and you can do this with other metals, but how they trade against each other. Like right now, you can buy 88 ounces of silver for every 1 ounce of gold, which is historically, that average number is closer to about 55 ounces. So what that tells us is silver is inexpensive against gold right now. And new money's coming in. We lean heavier towards silver with the target that when that ratio at 88-1 comes back toward the historical average of, let's say, 55-1, once we see that movement, we're going to move out of silver back to gold. You're going to pick up some extra ounces of gold because that ratio has changed. And then we watch the ratio and we move in and out of gold and silver over time. In that ratio trading, we compound ounces, by moving back and forth that way. In the simplest of terms, and I'd encourage a call if you'd ever want to talk in more detail this way with me. But in simplest terms, what we've come to find out over the last 50 years is about every 10 years, you can count on doubling your ounces. And from a generational legacy standpoint, we see gold and silver as not only beneficial in your portfolio as a preservation asset, but with that strategic kind of long-term growth. What started out with maybe you or me, coming in and maybe only having a couple gold coins and a few silver coins. But if we can double our ounces every 10 years, 2 or 3 times in our lifetime, and then we hand that off to our kids and then they can double their ounces 3 or 4 or 5 times, now we've got the power of compounding going on, and there's an asset that has grown and expanded over time for folks. So that's kind of what we're doing strategically within the gold and silver side, that I think kind of sets us apart in the industry and moves us out of that just a transactionally based relationship to an ongoing advisory, longer term relationship.
I just downloaded the Vaulted app. I remember that you talked about this. Makes it really easy to be able to invest. And I actually set some alerts on different apps like, Robinhood or, whatever app you're using to watch stocks and crypto or whatever you're watching. You can actually set an alert where it tells you where things are at. So I've been watching metals for years now. And I set a number on there that it was like, okay, once it gets to this point, then I definitely want to either buy or sell. And so lately that alert has been going off a lot. And I just want to point it out. This Vaulted app has made it a little bit better for me, not knowing where to turn or who to talk to. But I've thankfully met you, Jeff, and I've gotten to talk to you more as, we've been better acquainted over the last year and a half or two. And I'm trying to learn more because I was a young investor. And I didn't realize what I was getting into with metals. I guess the timing I got in, I thought that I was going to make money like I did in real estate. And that was not the case. I actually lost money when I first got in. And all my people who were influencing me were like, "Oh, you got to do it now because I made this much money." And I just thought, "Well, that's great. I'm going to try it." And it didn't work out that way. And I wish I would have held what I had. And today I would have made that money. But it is a longer hold. And so you have to be used to looking at it down the road. And that was the difference with me as a young investor thinking, with my impatient, distracted mind, that I need to, make money on my money, put my money to work, and real estate was doing great at the time. So I knew that better than I knew metals. And I sold
Mhm.
out, and here I am back in real estate, and some of those things have lost. So it's really, timing, it makes a difference. And if you can hold on to things for a long time, you usually do better. And so that is something I want to point out, is if you're a younger investor, those might be some tips, is to, set some alerts on it, look through historical charts, go to that Vaulted app, check it out. Because this is definitely something that is useful no matter what your age is. But when you're younger, you don't see it the same as when you're older. And I didn't know that. And I learned that from experience. So thanks for talking me through all that and sharing the historical charts with me and everything. I
Yeah.
really appreciate that.
Yeah, I've
Hey,
got
guys, can I chime in with one question? Just one quick question, and then it's two questions. First question: do you use dollar cost average? And I assume you do. So with full folks,
Yep.
they buy same out periodically to avoid market volatility. It essentially becomes like a savings machine. Instead of putting a certain amount of money every month into a stock, you can do it, or a mutual fund, you can do into gold or
Yep.
silver or whatever you feel happy with. The second question is, what do you do with all this gold? I'm a big fan of coins, and I have a foolish dashed up safety box, and there's another box, and then it's like at some point winds up interesting. You have to do something with them. Do you put them in a storage somewhere, third party storage? I'm just curious because at some point you question having all these supply of physical coins, or do you just I don't know, use a vault or something?
Yeah, great questions, Mike. The cost averaging thing is something that we absolutely we work with clients on and highly recommend. I mean, it's needed. Not only do we see kind of particularly like on a quarterly basis, but then even within that, we're watching the markets, and we're not afraid to look at clients and just say, hey, the charts seem to be showing us something. So how about this would be a normal time for you to add to your position. How about we wait? As a matter of fact, we've been holding with money on the sideline through most of the summer, waiting for a particular price correction, and we got that this week. So, I mean, it's been a busy week for us deploying money that had been sitting on the sidelines waiting. So we're really me and my team, our whole company. I mean, we're working hard, to try to give the best advice we can that way. To storage, your question on storage, huge question, right? Because when you start talking about gold and silver, $25,000 worth of gold fits in your pocket and nobody knows you have it. $25,000 worth of silver, if you don't pick it up, right, you go to the chiropractor. So, it's at some point in time as you're scaling your ounces, how many ounces do you want in your house or in your safety deposit box, or and everybody kind of has a different kind of comfort level that way. To answer that question for folks who are saying, I just don't feel real good about having, any metal in my house, or I don't want to have more than X at my house. We've got relationship with third-party storage facilities all across the country. We've got half a dozen relationships in every time zone, and we can help that way, and rates are reasonable that way, and we're dealing with companies that regular audits, and are with the Lloyd's of London policies, and just a lot of safety net for people who are going to place their metals in storage. But honestly, it's part of what makes Vaulted super attractive to our online investment platform. You're investing in big bars of gold, big bars of silver, but you don't really, there's no delivery concerns, right? Everything's already in storage at the lowest rates in the market. And when it's time to ratio trade, you're not shipping anything. I mean, that's one of the logistical concerns with folks that, as we're anticipating a move from silver to gold ounces here at some point over the next, year or two, we've got a lot of clients that are sitting on a lot of ounces that they're going to have to ship And that's just a logistical, nightmare that has to be considered. And if you have it in storage, whether it's through vaulted or through McAlvany Precious Metals, then you've got, at least on the silver side, the shipping, side, you have that logistic covered that way.
So great. Just one more follow-up questions, and then I am shutting up. So with vaulted, I'm not familiar with this, but it sounds like it's essentially folks are buying not, well, maybe real gold. It's just not in their possession. When that happens, it feels like, how is it different from buying some gold linked, stocks or gold linked other traded instruments that are effectively, you're providing storage for them, you're providing ability to trade. So it's almost like, what about commodities contract? Why don't you own a contract on future gold delivery? I'm playing devil's advocate because I don't know the difference.
No, and it's the right question to ask. 100%. In the difference, predominantly, in that is, with vaulted, again, you are buying allocated physical ounces. Ultimately, depending as you accumulate those ounces, then those bigger bars. So in Canada, the bars are kilo bars, so 32-ounce bars. 1,000-ounce bars over in London, those bars become yours, right? I mean, so then you start to own you own those as you hit those ounce levels. The predominant difference between, let's say, vaulted and then doing something in the futures market is the volatility side. Once you're starting to play contracts, there's a volatility level that most gold investors that they're not looking for. They want more stability, more steady than what you see in future trading that way. Beyond that, is again there's some different tax implications involved but that's a whole nother conversation. I don't want to get in the weeds necessarily there, but predominantly it's Mike, the folks that are coming and using vaulted and invest in the hard ounces from us at McAlvany Precious Metals. They're trying to find no counterparty risk, and they're trying to find that asset preservation side of it that some of these other options don't provide.
That's the difference.
I appreciate that, and I can see the tax. If you bought futures contract and the gold price is up, and the contract is maturing, you're going to have tax implications. You can roll it into the next contract, but then you're going to have gains while you're holding appreciated gold. You don't pay taxes until you trade it. And is it, interestingly enough, this is the tax question. So if you have appreciated gold and you bought it for, I don't know, let's call it $1,000 an ounce, and now it's what is it trading today? It's almost 2,500 an ounce. When you sell, do you theoretically own the taxes in it, or is it considered to be personal property? I'm just curious.
So one more time, I'm sorry, Mike. Say that.
You bought bar of gold, right? I mean, a physical part or coin. So and then it appreciated in price. You bought it for $1,000 an ounce, and now it's worth $2,500 an ounce.
Yep.
And you sell the gold at this point, just as a diversification or whatever decision. Is that tax liability associated with that, or it's considered to be personal property? And usually, like you bought an antique chair and it's worth more now. I'm just curious. Is it more of a private transaction, or it's a report? I mean, maybe it's IRS maybe wants you to pay a tax. I don't know. I'm just kind of asking a question. Maybe there's a benefit of that.
At the end of the day, the IRS is going to want their share.
Okay, fair enough.
Yep, and within the bullion market, you're going to pay that top level tax, 28% on bullion, because it's looked at in that light from the IRS. One advantage of vaulted, on a side note, we have a private letter ruling from the IRS that says that if you hold your metals in vaulted for more than a year, and then sell your metals, the IRS considers that the fulfillment of a prepaid forward contract, and therefore there's a favorable tax situation that applies there. So you move from that 28% tax on the normal bullion to where it vaulted if you've held that account for more than a year. Now you drop down, you're at 17. And so there's a tax advantage that comes with vaulted as well. And that's a discussion we can have, with any of your folks.
I appreciate you sharing that. Thank you.
Yeah.
I'm definitely going to talk to you more about that. I know I talked to you a while back about this, but I need to focus on things one at a time to make them great.
That's right.
And since I had that alert going off and all the news that's been happening, it's definitely a time to consider, with the interest rates going down potentially soon, might be something to definitely consider. And hedging right now, that's so important. And it makes me excited because there's going to be a lot of opportunities out there, but I know that people are looking for safety, and it makes me excited also for Tempo Income Fund, because this gives people the types of return in the income that they're looking for, that they've been, enjoying from some of their investments over the last few years, but that might be changing drastically, or at least enough to make a decision to stop the volatility, because it's hard to make day-to-day decisions on this stuff. It's stressful and emotional, and metals are definitely a legacy gift in my mind. And if you start accumulating now, what's going to happen in the future, we don't know. It could be great for an emergency fund, but it could also be a great gift for your next generation.
That's right.
Well, Jeff, I thank you so much for having this talk with us, and I enjoy all these types of conversations. And so I wanted to tell you I will be in touch soon. And thanks everyone for attending this call today. If there's any further questions, reach out to Jeff or me, and I'll put you in touch with the right person. And if you have anyone else that you would like to request to do a lunch and learn, also send those suggestions to invest@tempofunding.com. Have a great weekend.